It is that time of the week. It is a new Monday. It's a new podcast. You are listening to Trading Tips with Jim. And you might wonder, so why should I spend the next 25-30 minutes listening at this podcast? Well, that's totally up to you. Be my guest, switch off. But if you listened to last week's podcast, you heard me say that I thought it would be a brutal week at Nasdaq. And a brutal week it became. Nasdaq down more than 3.16%. And I was not only correct last Monday, I was correct more or less every single week before that. And I've been correct years after years. And I do know whenever I post a title in the podcast series saying it will be a red week, the view count, the listening count will go down. Some people seem not to be triggered by reality, but it is a harsh thing that you just have to do. Even though you do not like it, you wish it would be different. Even I wish Nasdaq was up 3% and not down 3% last week. We have to face the reality. I see this in business and I see this in investing. Sometimes you want to ignore the obvious and rather pretend. And if you pretend, maybe you're lucky, maybe you are able to hit a few winners, but in general, it is almost impossible to do well when markets are really falling, unless you're doing the shorts. Of course, it will be far few less winners, will be less among them, and more losers, and that makes your game 10 times harder. But you heard me say over and over again for very long time now that there is 3 places where I think that you can be a bit on the better side of things. That is gold, that is war, and that is oil. And oil went very well last week, up $1 to 88, holding very strong. You hear the expert says that oil will fall, it will have the hugest fall, it will go down to 50, 60, but it doesn't happen. And I gave you the explanations why it will not happen. It will happen, but not yet. And I painted that picture in the bigger scope of things, the trend, the world trends, and these really matters. I might miss sometimes out on the hour or the day or the week, but in general the big trends, I've been very correct on the big trends. And again, you might be new and wondering, so how can I benefit from this? I'm here to make money this week. Well, if you are into the market for making money this week, you should for sure have a fair idea. Will the market go up or will it go down? I will try to answer what I think, and despite being correct almost every week, I might be wrong. Hopefully I will be wrong, but you will have my answer shortly. What about the $1,000 challenge? Well, as you know, we are into Occidental Petroleum, and Occidental Petroleum made a slight upturn last week. Not much, I think it was up like close to 2%. But 2% is exactly what we need. Oxy ending at $65.80. That's the $1,000 challenge where I'm trying to grow $1,000 as fast as I can. Playing a bit risky, but as I warned you, it's very, very hard when markets are so sour to do this properly. It's really, really hard. And I could have picked stocks which I saw did quite much better, but they come with a higher risk. So I'm trying to play it a little slow as the markets are as they are, to make sure that we stay in profit, and still we are up in the profit. Currently, as we speak, it's 12% profit for the $1,000 challenge. Nothing much to brag about, but if we look for the time period, we see that Nasdaq went only one way, down. Nasdaq being down below 13,000 at 12,984 points. And the question you may ask, well, will we this week be heading up or down? And will I stay in Occidental, or do, as I said last week, change to something new? Let's start answering the first question. So what do I think will happen in the week ahead of us? First off, there is a lot of major things happen in the market this week, and I will get to it in just 1 minute. But if we do understand that the market in general is in a falling trend, so this is like we're going very fast. It takes time to break. It's just how it is, and the faster you go, the longer you go, the harder the break will be. So we are facing a downwards trend. There is a huge pessimism in the market. You can see it in the buy and sell signals. They are down at 9. We'll also get back to that very shortly. As low, I can only back to when COVID was starting, I saw numbers this low, and that was the buying opportunity of a lifetime. Now we are in that downwards trend, and things are very, very sour. So we need something that can turn, because we know we start the week on a negative note. So what can turn the market this week? For sure, things being oversold can turn the market. We do know that investors are trying to find sweet spots where they can do bounce trades. When things are oversold, there usually is a natural place to make some money. So we have that criteria. Then there is news. News very often change the way the market moves during the week, and especially Fed is talking or bigger things like that, inflation numbers, etc. This week will be hammered with quarter results. That's the one thing that you can take away from this podcast, is that this will be quarter week season. It will be many of the absolute major companies coming, and everyone, at least the professional one, will look at the profit margins, because that's how you can tell something where economy is heading. You can offset some of the cost on the end consumer, but not forever. People are changing their patterns, and you want to detect it. We know that Netflix did quite okay last week, but this week the heavyweighters will come. Starting already on Tuesday, Google will come, Coca-Cola will come, Microsoft will come, GE Electric will come, General Motors will come, Snap will come, and very soon Visa and 3M. So already on Tuesday, tomorrow, the market will be flooded with news. I will make this prediction that most of these quarter results will come either somewhat close to expectation or lower. I do not think they will come in the upper end. Some of them will, but most of them will come either on consensus or just below consensus. So you might ask, I don't care about all this yatta about everything. I want to make a trade. So how can I trade on these quarter results? Well, if you go to stockinvest.us, you type in your tickers, you can see how the stock did before and after quarter results. You will find that as an option in the tab just above the chart. Some stocks have very predictable movement, and we lined up chart between each the quarter results. You can see how they line up and see if there's a pattern you can trade on. Some stocks typically fall the day before quarter results and then go up after. Some go up before quarter results, then go down after, and you can place your bets whether it's a short or a buy based on this, and you will have a much better chance of hitting the right if you do check how history used to treat the quarter results, what is the most typical common pattern, and start to check the financials and the expectations of the financials. Anyway, the bigger market, they will look at how things are changing, how dynamics are changing in the markets. And just before we continue with the rest of the quarter results, that is why I over and over to the boredomly talk about talk about these big trends is and I say go into war, go into oil, go into gold, because money will flow where they are most secure. And now I think that you will see money again start to go out of certain businesses, and we do know that as interest rates go up, markets go down, that money flows into bonds, more secure items, but there is also like a general shift in the market itself. We saw that typically around the AI hype, how money just flow out of certain good stocks into AI. Now it is again shifting, and it will be shifting to the profit makers. That's my bet for it. So look at who has the highest chance of making profit. And if they make profit, they usually will pay dividend. That means that the dividend players will come out. And that's Stock Invest, another commercial for Stock Invest again. Dividend information is now out, so you can see how the stocks are doing on their dividends, because money will go where it's safe, and now they will slowly again go from high risk into more better dividend stocks. Has been a pattern in general for the last year, especially last 8 months, I would say, after Christmas. Been very started maybe February, started slowly to move very towards dividend. Dividend is always popular, but now even more so as the interest rates go up and stock market go down. The risk is changing. So that's one of the things which I think will happen, but quarter earnings just continue. And on Wednesday, you will have Meta, you will have Boeing, you will have eBay, you will have General Dynamics, IBM, Mattel, Orly, and T-Mobile, to mention some. And among these, I mentioned one company, Boeing. And Boeing, if you follow Boeing, you will know that Boeing was a super dividend king, paying dividends for years and years and years. But last 2 years, they haven't paid because they took a hit under COVID, going to negative markets. But I think things again will start to brighten up for Boeing, because they are making money on the war. War is where you want to be, whenever it is a supplier of food, or if it is building aviator systems, whatever it is. War is where you want to be. And I believe Boeing again will start to show much better results. They will probably not have dividend this quarter, but I will not be surprised if next quarter will be a dividend quarter again for Boeing, getting back on the track with their earnings and financials. Then on Thursdays, continue with Amazon, Chipola, Ford. There is so many of them. Roku, Royal Caribbean Cruise Line, UPS, Valero, United Steel, etc. They will come on Thursday, so it will just be a full week of tons of quarter results. And if you are in one of these stocks, just be ready. They will move. Most stocks have a reaction to the quarter results. Hopefully it will be up if you're in the stock, but there will be a reaction. And if you're sitting in some sort of leverage position, be aware of that, because you do not want to get a call on your position if you are in the wrong way, either it is up or down. On top of this, there will be some quarter results. GDP estimates for it will be third quarter will come. Expectation is around 2.1 for the quarter, or 4.3 analyzed estimates for GDP. I will not say so much about GDP. What you have to understand is that the government is just spending more and more money, borrowing. The US government is borrowing more and more money, pushing into the economy. They are pushing it into growth of the governmental sector, keeping alive and keeping numbers up, while most of everything is struggling. I think I saw that somewhere that the average cost for the American family now is $6,500 extra per year because of all the inflation, etc. That is even after adjustments of salary and everything. So people are losing out on the buying power. So you have tons of quarter results coming, but and these things, if they come in very good, and everyone think, well, there is really good times. The economy is not heading for a recession. We are well on the way. We hear the bragging about Biden economics, how well it's doing, but if you look behind the numbers, there is a different story to all of that. But if we believe that, and it may very well happen, that economy will just continue delivering good numbers, the market can take that as a sign and push stocks up. We'll finalize that argument in just a few minutes, because we will look at the buy and sell signals, and there are some argue why these things can happen. But there are big trends, as I say, and these are the geopolitical trends, and that is why I was so correct over all these years. It's simply because I look at what is happening, and sadly now there is a super mess in the Middle East, and that one is most likely probably going to grow. And any day, it might even be today, it might be in half an hour, it might be during the week, it might be next week, nobody knows for sure. This thing can escalate totally out of control. We know that US is sending more and more destroyers to the region and the hunger ships to the region as a deterrent. But in any news article I see, I can see that the rhetorics are getting harder and harder, and more people are actually calling for war. See this among Republicans, see this among the Democrats when they speak, arguing that now we have to do something with the evil axis of China, Russia, Iran, etc. It's time to do something. Rhetoric has gone from threatening to actually call for action. And that may, as I say, lead extremely bad off. We will not go so dark and deep in this podcast, but you can just imagine yourself what will happen and how things will escalate. If anyone thinks that China will just sit on the sideline and watch everything play out, is very wrong. They will use their chance to achieve some of their goals for their 50-year plan, which is to be the leading in the world by 2050. And then we're talking about military, we're talking about economy and everything that is. So they have a huge plan where they want to be. And there is no way that the world can escape also China getting involved if things escalate more. It started with Ukraine. I thought Taiwan would come before the Middle East, but as money was pumped into Palestine via sub-channels, sanctions was released on Iran. It just had to happen, and now we will just have to see how it plays out. But in this scenario, it will be a lot of fear, and it will be very hard for the stock market. And again, it sounds like a commercial for the worst thing that you can have, but oil gold war will probably do very well in this scenario, because if things keep escalating, there will be even more push for weapon. And if I'm wrong, still the argument across any government, and we're not speaking about the Norwegian government, we are even speaking about the Norwegian government, which usually is quite sane and usually quite peaceful. But now they are just talking how much ammunition can we buy, how fast can we build up our storage, how much money can we send into war-related activities. It is nothing but insane, and that as long as this rhetoric continue, war will be the place that you want to be, gold will be the place that you want to be, and oil is because of the disruption. Because looking at US strategic reserves, they have already been halved, and oil, as you know, is a huge part of the war engine. Now you will have two things happening. If war escalates, oil will be very hard to come by, so that will keep the prices up for a short time, but all economies will keep crashing. That will eventually put oil down. So we're in for the last rally of oil, which I've been speaking over and over again. We will use it and slowly get out of oil position, because in the future, if everything goes okay, it will be a green future. It will be electric cars. All of these things. First, we have to get through all this hurdle of darkness and all this call for violence, and get back to a place where humanity can thrive. And in that future, there will be electric vehicles being the winners, and fossil cars will disappear eventually or change radically. In the meantime, of course, we have to stick to what is realistic. We cannot be total woke or ding dong, and we have to place our money where money is to be made. Gold, by the way, is related to fiat money being, they absolutely have no value. Fiat is just, and when you see how US is printing out money, and more or less everyone is printing out money, so gold just makes for a safe haven, and that is why I still remain so strong on gold, because I think it will hold up. Personally, I have a target of 2,500 for the gold. I think it will head up there. Personally, I am invested into gold. We are 20 minutes into the podcast, and it's time to conclude. What will the week hold like? You heard a lot about quarter results coming. You heard me saying a lot about the geopolitical situations, all of these things. Boil for volatility. I think that we will see some volatility during the week, up and down. And before finally concluding what it actually will be, let's look at the buy and sell signals. And the buy and sell signals is usually a super good item to go in. You heard me, when they are very high, I say to that, no, it's getting too high. We will have corrections in the markets, and it is always correct. Could miss for a week, but it always turns out to be somewhat correct. It's measuring the psychology of the market. And now the buy signals, as I started the introduction, is as low as I haven't seen them since the beginning of COVID. Across all board is only 16% buy signals. More than 26,000 tickers, only 16% buy signals, down from 20 last week. If we go to Nasdaq, only 9, and if we go to New York Stock Exchange, only 9% buy signals. During COVID, I think I saw it down to 5 and 7. These were the low numbers, if I remember correctly. But this is super, super low. London is 10, Tokyo only 12, and Shenzhen, China is down at 9. Haven't seen China this low since the COVID started. These numbers argue for a buying opportunity of your lifetime, but as I mentioned, when numbers are so low, it can go into an even more frantic sell-off. So here is the gamble. This is where you just have to make up your mind. What do you want to do? Because when and if these things turn, let's say this is the week that things turn, you will see an upturn that we haven't seen for quite some times in the market. But my bet, and here comes the answer, looking at the chart, we are in a downward trend. Nasdaq is not at the bottom of the trend. Everything is broken, 13,000 points. We have a geopolitical situation so shitty that we cannot imagine how it should end well. We have the 10-year treasury creeping up to 492, was hitting 5 actually, and you hear everyone say, no, we are at the top of the interest rate hikes, but this just argues for more interest rate hikes. And with all the tension in the Middle East, there is one thing which I wanted to say, which is happening in the background. All logistics are again disrupted. And this disruption of logistics just means that some goods, some particular goods that have long logistics routes, will most likely be more costly. Same also because oil prices are going up, the energy cost is going up, will be more costly. So there is no reason why interest rates should go down. They should simply just continue upwards. So based on all of these facts, I think that sadly another red week will be here. And it will just be very interesting to see. It can be the worst week that we had for months and months, and maybe even a few years now. On the other hand, there is a chance that it might turn. Some peace talks around the Middle East, ceasefiring, some less aggression, but there are talks. Some good quarter results, and we will have a firework. So you should be ready on the buy button. But for me, it looks like yet another red week, sadly. But the super buying opportunity is coming, and we will be there, sure, to pick up the slack and get in on some heavy winners. In the meantime, if you ask me, so where are you, Jim? Where are you sitting in all of this? As I told you, I reduced my portfolio quite heavily. I just have a small part in the market as we speak, and most of it is secured into gold, oil, and war. And it's doing very good. Just look at Northrop Grumman, for instance. Look at Chevron, which I have. Chevron will have quarter results on Friday, if I'm not mistaken. They've all been holding up very good as market's been going down, and do some odd bets here and there. And one bet I did was in NEO, which hasn't panned out at all, sitting with a loss in NEO. So not everything is correct, but the main thing is that I have reduced my portfolio size. I have a huge clunk in what I consider to be good, and so far I'm holding up very good. When markets turn, all the things should start moving fast upwards. A lot of depression there, a lot of dark material for the week ahead, but we are realists. We cannot just sit and ignore the facts. The facts are like they are, and you can make money in a falling market if you do it correctly. There is huge opportunities. If you play the week somewhat correctly, at least you should get better out. I know many of you are sitting now with bleeding losses in the markets, and I'm sorry I cannot do more about it. I can only repeat, keep a stop loss. You will see, for instance, in the boot trader, which I'm making, been doing so very good, but now a few times the stop loss hasn't been issued as it should, and suddenly like a company like Lucid take 5% dive, where it should have been cutted at 1.8%. Instead, you go all the way down to 5%. Unnecessary. The strategy was very well working as long as the stop losses were properly triggered as they should. So have a stop loss. That is one way. Reduce your losses as much as you can. Wait how much you will put in a week, how much you will have in the market. It's better to be a little wrong than being very, very wrong when things go really sideways. Occidental was last week's tip. We've been in Occidental 2 weeks, I think now, if I remember correctly. And I said last week that I might be changing for something more as I expected a red week. I might look for some better opportunities, but checking everything and seeing how things are. I will not change. I will stay in Occidental. I think it's a bigger chance for an upside or a sideways movement in Occidental than in many other states. For the $1,000 challenge, I will stay in Occidental for the week as well. And as you know, I will post on YouTube whenever, in the comment section, whenever I sell the stock, so that you know. I have found quite many good candidates which are on my list, but you will be informed next Monday, because I will not buy a new stock before you know it. I will only let you know first, then I will do the actual trade and show you as well. 28 minutes, and maybe you was listening for the first time, and I hope you found some good information. Maybe you're struggling to understand, what should I use this information for? Well, hopefully you will start to think, hopefully you will start to check, and for sure check if your stock has quarter results, or if there is certain stocks that you can play based on how they move in the quarter results. As usual, we will end this podcast on a personal note. What did I personally do last week from the things that I do? And let's start with August. Well, I was playing a lot around dividends and ways to look at future dividends. And here is a few things coming up in the future. So that was one part which I was working on, new tools for you to use. Because I do want to help you make better decisions, better trades. And in this situation where interest rates is going up, dividend is where you want to be. It's very easy. Just check Google search results and you will see how interest for dividend is scrolling. Money are flowing these ways, and dividend is not only in stocks, it's in bonds as well. They have the monthly, quarterly or yearly dividend payouts. So I was occupied working a bit on that, worked a little bit on the shark trader at getagraph.com, still struggling a little bit with putting the sales orders. It's a technical thing, making it work as good as it should, but I hope it will be sorted this week. To end it, the weekend I went for a meeting with fellow metal detectorists in the Mink Club. We were going to the very end of Lithuania, all the way to the border of Latvia, to a small place called Rokiškis, and went over on the Friday, met some of the colleagues, had a super nice time. On Friday, on Saturday, we started at the place. It's a place called in Rokiškis, where they wanted to check out an old dvaras. It's not a castle, but it's a very, very high-end building, and they wanted to see if they could find some tracks. So we were, I think, 25 metal detectors going around, checking a park, checking around that house, looking for items. The area was heavily trashed with bottle tops. As you can imagine, there's been a few parties in the park, so most of the things picked up were bottle tops and modern stuff, but a few nice items were found that will find their way to museum. Then we had a very nice evening as usual, eating a lot of good food, good talks, and all the things that you can do as a group. Included included a little drinking, let's put it this way. It was indeed a nice Saturday, and even sauna. Lithuanians love their sauna, so sauna is a part of every arrangement. On Sunday we went to a local field. Got access to a local field, and there was quite many nice finds. I might even post a few of them. I found a few coins from the 1600, a fake silver coin among these things, a silver item I'm not sure which is, and a very old, what we call poor man's ring, a ring made not out of gold, not out of silver, but a mix of brass and copper. It's called a poor man's ring. Was very popular back in the ages. Most likely it is early 1900, could be late 1800, most likely it is early. No value in it other than affection value, and you make you think, so who wore that ring so many years ago? I might post a picture of some of these items on the podcast version that you will find on YouTube. But we have passed more than 30 minutes. We are in 32 minutes. It's time for me to say goodbye. This evening I will fly to Norway to see my sons. Really looking forward to that. Norway is getting cold as well. Has a few things to do, but next Monday I will be back. I will be reporting from Norway next Monday. Until then, I hope you will have a super week. I hope that you will put more greens into your bank. And that you do successful trades. I'm really hoping I'm wrong. I hope it will be a good, solid green week. I'm prepared for a red week, as I said, but I hope for a green week, and I hope that you will be back in a week. Until then, have just a good week. Bye.